Assalamualaikum and hi. We are from group 6. We want to present about set 1. Before that, we want to introduce ourselves. Hi, my name is Muhammad Fita Fizi. My number matrix 23DLS25F1041.
Hello, my name is Muhammad Zamir Zahzan bin Muhammad Zamri. My matric number 23DLS25F1047.
Hi, my name is Haris Izadi bin Sazrin Azwan. My number matric is 23DLS25F1008.
Hi, my name is Muhammad Ali Irfan. My matric number is 23DLS 25F1023.
Hi, my name is Muhammad Alif Najmi bin Idris. My matrix number 23DLS 25F1029.
My name is Muhammad Nafar Razid bin Muhammad Razi, and my matric number is 23DLS 25F1122. We will explain question number 1, Malaysian Institute of Accounting, MIA. Regulation and enforcement, regulating the practice of the accountancy profession, professional development and education, determining the qualification for admission as members and conferring the Chartered Accountant Malaysia, CAM designation. Support and enhancement, supporting the interest of the profession. Malaysian Accountant Standard Board, MASB, develop and issue standard, determine, issue, review, revise, amend and revoke approved accounting standard for the preparation of financial statement in Malaysia. Ensure international alignments, strive to develop and promote high quality accounting and financial reporting standards that are consistent with international best practice.
Assalamualaikum and hi, I will explain question 2. So, financial accounting. What is financial accounting? Financial accounting is the process of recording, summarizing and reporting a company's financial transaction to provide an accurate overview of its financial performance and position to external stakeholders. This involves preparing standardized financial statements such as the balance sheet, income statement and cash flow statement, which adhere to established principles like GAAP of IFRS. The goal is to provide reliable information for investors, creditors, regulators and other external users to make informed decisions about the company. Cost accounting. Cost accounting is the reporting and analysis of a company's cost structure. Cost accounting involves assigning costs to all of the company's business activities. And finally, management accounting. Management accounting is the process of preparing reports about business operation that help managers make short-term and long-term decisions. It helps a business pursue its goal by identifying, measuring, analyzing, interpreting and communicating information to managers.
Now I will explain about the accounting concept. Firstly, material concept. Material concept means the significance of transactions, balance or errors contained in the financial information. For example, buying a pen for 5 ringgit for office use does not need detailed recording as it's not material to financial statements. Next, business entity concept. Business entity concept. The concept of business entity claims that the personal activities of the business owner have nothing to do with the business and are not considered as business activities. As such, they cannot be recorded in any of the business transactions. For example, if the owner withdraw 1,000 ringgit for personal use, it's recorded as drawings and not as business expenses. Moreover, going concern concept. The going concern concept states that accounting for business should be prepared with the assumption that the business will continue to operate for an indefinite period of time. For example, assets are recorded at cost, not liquidation value, because the business is expected to continue.
Hi, I will continue the explanation about accounting concept. I will explain about accrual concept, objectivity concept and money measurement concept. The accrual concept requires accountants to record revenues when they earn and not when the cash is achieved, and expenses need to be recorded when they are incurred and not when the expenses are paid. For example, a company provides consulting service to a client in March, but the clients pay in April. Under the accrual concept, the revenue is recorded in March when the service was provided, not in April when the cash was achieved. Next, objectivity concept. Objectivity concept requires a business financial record to be prepared based on verifiable evidence and transaction details obtained from source document to support the business transaction that has taken place. Example for objectivity concept is a purchase must be supported with a valid invoice or receipt before it's recorded. Last concept is money measurement concept. The concept of money measurement explains that only transactions and events that are capable of being measured in monetary terms are recognized in the financial statement. Example for money measurement concept is company have an employer with a highly skilled and brand reputation strong. Even this thing have an advantage, but it cannot be measured in monetary terms. They are not recorded in the company's financial statement. On the other hand, if the company buys machinery worth 50,000 ringgit, this transaction is recorded because it can be expressed in monetary terms. So, under the money measurement concept, only transaction and events that can be measured in money are recorded in the book of account. Thank you.
Question number 4. 5 source document. Function of the document. First, sales invoice, used by the seller to request payment from the customer for goods sold on credit. Second, credit note, issued by the seller reduce the amount owed by a customer because of returned good for an allowance. Next, memo, internal document used to record non-cash transaction such as drawing, adjustment or correction. Next, check counterfoil, kept by the business as proof of payment made by check. Lastly, official receipt, proof that cash, check or bank transfer payment has been received from a customer. Transaction that related to source document. First, sales invoice. On 3rd June, we sold good on credit to Ali Enterprise for 2,500 ringgit. This transaction is recorded in the sales journal because it is a credit sale. This sales journal is a book of prime entry used to record all credit sales transactions. It lists the date, customer name, invoice number, folio reference, and the amount of the sale. At the end of the period, the total from the sale journal is posted to the sale account in the general ledger, and individual amount are posted to each customer's account in the debtor ledger. In the double entry, we debit Ali Enterprise account to show that they owe us money, and we credit the sale account to record the revenue from the sale. Next, credit note. On 5th August, a credit note for 3,000 ringgit was issued to Berbata Enterprise because they returned good to us. This transaction is recorded in the sales return journal, which is a book of prime entry used to record all goods returned by customer. The sales return journal help to keep a clear record of all return so that sales can be adjusted accurately. It reduces the original sales figure and show that we receive the good back into inventory. Last, in the double entry, we debit the sale return account to record the return of good and credit Berbata Enterprise account to reduce the amount receivable from them.
Okay, now I'm going to explain question 4. 5 source document. Transaction that related to source document. Official receipt. On 8 June, we received RM 5,000 in cash from Ahmad Enterprise. This transaction is recorded on the debit side of the cash book because cash is increasing. A cash book is a special book of prime entry used to record all cash and bank transaction. It works like both a journal and a ledger, meaning we can use it to prepare double entries directly. In the double entry, we debit in the cash account to show an increase in cash and credit Ahmad Enterprise account to reduce the amount receivable from them. Information that related to source document. Memo, on 10 July, the owner took goods worth RM100 for personal use. Since this is an internal transaction and does not involve an outside customer, a memo is prepared as the source document. This transaction is then recorded in the book of prime entry under the general journal. The entry shows a debit to drawings and a credit to purchases or inventory to reflect the withdrawal of goods for personal use. And last, transaction that related to such document, check counterfoil. On 12 June, the business issued a check for 1,500 to a B Trading. The check counterfoil is kept as proof of the payment made. In the book of prime entry, this transaction is recorded in the cash book on the credit side because money is going out of the business. This helps maintain accurate records of payments and ensure proper tracking of cash and bank transactions. Thank you.